Hello and welcome. You're with us here in Business Today. I'm Abha Bakaya. Here are the top stories tonight. Expect the RBI to further reduce GDP growth estimate in its monetary policy decision tomorrow, says the Group Chief Economic Advisor of State Bank of India in an exclusive interview with Business Today TV. Predicts an improvement in the October to December quarter. 50 basis points is the new 25 basis points, says Soumya Kanti Ghosh in an exclusive interview. Tells Business Today TV that a rate hike is needed to protect the rupee. Stock market decline for the 7th day in a row. Nifty ends at 16,800. Sensex falls 188 points ahead of the RBI policy. Metal and pharma stocks gain. The rupee regains a little bit against the US dollar but remains closer to 82. The British pound continues to weaken against the dollar despite Bank of England's decision to buy bonds worth $65 billion. 6th airbag safety rule for passenger cars deferred by a year to be implemented from 1st October 2023. Highways Minister Nitin Gadkari says decision taken because of supply chain constraints. With all eyes on the MPC meet outcome tomorrow, we spoke to Soumya Kanti Ghosh of SBI about the expected rate hike. He spoke to Business Today TV's managing editor Siddharth Zarabi about the rupee rout, the spike in inflation and the overall state of the economy.
What do you expect from the Monetary Policy Committee? A hike is a given, but the extent is a debate.
Yeah, thank you, Siddharth, for having me on the show. I think, Siddharth, the 50 is now the new 25. So all probabilities the Reserve Bank has to go with a 50 basis point rate hike just to keep the pace in conjunction with what's happening across the globe. Even though I think recently the Bank of England has given out some confusing signals yesterday in terms of bond purchase and the government. But keeping aside that, I think given the fact that Fed is going to hike by another 75 in November, 50 in December, I think the possibility the Reserve Bank will hike by 50 this time, and maybe it will, maybe as the pace of Fed hikes taper off towards the end of the year, the Reserve Bank can think of also tapering of the rate, the pace of increase. But tomorrow, most possibly a 50 basis point rate hike.
What is the impact of a 50 basis point hike going to be on the economy, especially growth?
See, I'll tell you one thing, Siddharth. I think growth surprisingly has been very strong. Some numbers are to be in perspective. Bank credit growth, which is growing at 16%, is now at a more than a 10-year high. And this 16% credit growth is actually driven by agriculture, infrastructure, SME sector, and of course retail. I'll just mention one number. The retail sector, specifically the MSME sector, has actually shown the significant jump in credit disbursement this year. So actually that goes against the convention of the discussion that the MSME sector was worst affected during the pandemic. So I think it has held up very well. So if I take all these factors into consideration, also the fact that the real estate sector first half sales were 60% across all metropolis. So I think all sectors have been holding back well. And so my sense is that at the margin it could have some impact, but as of now we think that this rate hike could be a positive communication in the markets, in the sense that it is going to protect the currency also to some extent. So from that point of view, I think if the currency gets protected a little bit, I think the markets will take it with a bigger heart, and also the industry, because at the end of the day, a large part of the input costs are also imported in the Indian context.
What kind of number for GDP growth for the current fiscal are you currently working with?
See, I think the first quarter GDP numbers were lower than the RBI expectation, but I think it was more of an statistical artifact because the manufacturing sector disappointed because, I mean, there was a lot of other factors which I will not get into the details. But as of now, I think tomorrow the central bank could revise their growth projections downwards to 7%. We are currently working with a 6.8% growth projections, but there could be an upside to that number in the second half if things continue to do well. But as I said to you, and also the fact that if crude prices continue to decline, I mean, currently the RBI assumption has been $105 per barrel. Currently the prices are around $85 per barrel. So if the crude prices remain in this range, I think that could also have some positive impact on the inflation. So if I take all these factors into account, we are working within 6.8% growth numbers today. That's more of a statistical adjustment given that first quarter was much lower than 16.2 RBI projections. But going forward, there could be some sort of positive surprises if things hold up as they're doing right now.
Inflation has been very sticky as far as certain items are concerned, including beverages, fuel. There is a big risk. Artificial block has been put on passing on the natural movements of global crude to Indian consumers, and I believe there will be an inflationary build-up there. And if you look at many of the household segments, what's your own reading of the inflation trajectory from here on, at least till December, if not beyond that?
So I think, Siddharth, before I talk about the inflation numbers, one thing I would actually request, and we have been requesting this for the last 2 years, is that we desperately need a revision of the CPI basket. It's based on 2011-12 consumption expenditure survey where food has a weight of 46%. I think no amount of, guessing could help us believe that food still has a weight of 46%. It could have declined to much lower levels. Now, having said that and assuming that the CPI numbers as given out holds correct, my sense is that one, yes, there are some upside risks to the food inflation because this time the cereal inflation has been running at higher levels given the fact that paddy output and wheat output are on the lower side. But I don't think that's going to be much of a concern because a large part of the populace will be protected for the next 3 months from the vagaries in terms of the free distribution. And secondly, I think last time when we had this inflation running in double digits food prices after the crisis, 2009-8 crisis, I think protein inflation also was significantly higher. This time what we are saying is that there is food inflation, but it's sans protein inflation. So if I take these factors into account, I think food inflation, this month's inflation number could be around 7.10 to 7.2%, and next month onwards, the numbers will actually trend downwards, and most possibly we'll get to an inflation number which is lower than 6% in March. So therefore, the RBI will have some sort of respite after September, but as I said to you, given the vagaries of the global uncertainty, I am not sure whether that could still lead to a situation of a pause in the rate hikes. But I don't think that there is too much upside risk on the food inflation, but there are some risk on the horizon.
Okay, let's move on to the rupee. It's become a massive talking point, and I have read your views in the past about the currency. This time, the global movement in the respective currencies, including the pound, where commentators in the United Kingdom are now saying that what is going on with that country, first Brexit, then Boris, and now what is happening to the currency management and unfunded tax cut. What's your sense as far as the rupee is concerned? Is it something that we should be worried about, or do you think it will find a level very soon?
No, I think to your first point, I think yes, what is happening in UK, Bank of England, I think it's Bank of England is actually doing an open market purchase, which means it's injecting liquidity and the government is putting money in the hands of the people. So that's a classic recipe of a fiscal and monetary disaster, and that's why that is pounding that is pushing the pound down, actually hammering the pound, and also there are now talks about that Brexit could actually be downgraded in terms, the UK could be downgraded in terms of the credit ratings. Now, having said that, I think in terms of India, let me put some things in perspective that yes, the rupee has been volatile in the last couple of days. But if I actually look from the beginning of the Ukraine war at the starting point and today, when the rupee is close to 82, I think the rupee has depreciated by around 8.2%. And if you look into the dollar index, that has appreciated by 18%. Now, if we just go back and see what happened after the global financial crisis, at that point of time, the dollar index has appreciated by around 6%, and the rupee actually lost 50% of its value. So clearly, in a situation when rupee depreciation is much lower than the dollar appreciation, it means that the weakening of the rupee is mostly because of the strengthening of the dollar and domestic macro fundamentals. So that's the good part, even though the rupee has declined. Now, if I fast forward it and look into episodes of the rupee disturbances over the say last 10 years or even the 20 years, I find that whenever the rupee has depreciated, there has been also a strong case of rupee recovery after the market has actually recovered. This was the case after the global financial crisis, when the rupee went to 69, if you remember, in 2013 August, then it reverted back to below 60. So my sense is that the RBI has defended the rupee to a significant extent. It has now spent close to $100 billion. But with a 9-month import cover, I think it will be better for the rupee to depreciate a little bit. In economic parlance, we call it that we should lean with the wind and not against the wind. Let the rupee find a little bit of value, and I think after things improve, things will improve in the next 2 months at the Fed pace of rate hikes taper off and Indian inflation numbers come lower than expectations. I think rupee will have much ground to cover with. But for now, I think possibly the RBI can let it go a little bit, but not to a significant extent, because a larger depreciation also biggest depreciation, and the market actually then believes that there could be the rupee actually could go even lower. So my sense is that allow it to get to some distance, but after some time, but not to the extent that what I will say, but may not make it significantly volatile in the intervention strategy.
Just a quick mention from you on the RBI's firepower and the options before it. Like you very correctly pointed out, a massive amount of dollars have been pumped in by the RBI to stem the slide. There are other options before it. Do you expect the RBI to be doing something tomorrow in terms of signaling to the market as far as its intentions on managing India's currency is concerned?
No, I think, Siddharth, that's a very interesting point. Before I answer that, one small data clarification. Even I think a large part of if you actually look at the RBI intervention in the foreign exchange market and decline in the foreign exchange reserves, you will find that the difference is huge. That indicates that a large part of the decline in the foreign exchange is also because of revaluation, because the dollar had relentlessly strengthened against all other currencies. So that we must keep that in mind. So it's not entirely the fall which is explained by intervention. Now, having said this, I think the RBI had spent, if you remember, in the last policy, a considerable amount of discourse was on rupee. I am not sure whether the RBI is going to have the same level of discourse over there. But maybe the central bank could mention a few words about the liquidity normalization. Liquidity recently has been declined to close to neutral levels. Maybe the RBI, maybe the speech could actually find some mention on the liquidity levels. But the central bank may make a mention of the rupee, but may not be to the detailed extent what it meant last time, because last time it had explained the vagaries of this currency in an uncertain world when the Fed is hiking the interest rate.
Markets failed to stage a rebound, extending their losing streak to a 7th straight day as global cues remained unsupportive. The Sensex ended at 56,410, down close to 200 points. Nifty also shutting shop at 16,818. That's 0.2% lower. Asian Paints, Tech Mahindra, Hero MotoCorp, Titan and Bajaj Auto, some of the top Nifty losers. On the gainers side, we had some names like Shree Cement, ONGC, Hindalco, ITC and Apollo Hospitals, some of the names that were managing to see a little bit of an uptick in today's session, and a decent one at that on Shree that was up 3.5%, followed by an ONGC. Global financial major CLSA has said that the Nifty could fall by as much as 30% from current levels. According to a report by the Hong Kong-based group, data points from the bond and equity market have been hinting at a fall. The group said the difference between the 10-year Indian and US G-Sec yields have fallen to a 13-year low of 3.3 percentage points. This, according to CLSA, along with a near record valuation of Indian equity markets vis-a-vis bonds and other markets, indicates fears of a 30% downside on the Nifty. Incidentally, the Nifty has fallen over 800 points in just the past 7 sessions alone. Planning an overseas trip or asking a cousin to get you an iPhone 14 from the US where it is much cheaper? Or do you have a child studying in the US to whom you send money every month? Well, you need to be aware of the foreign exchange rate, which, by the way, is not the interbank rate you see on news every day. This report brings you closer to reality about how much you really need to pay if you're buying US dollars.
Let's start with what you already know. You will be spending much more on your vacation to the US this year than you did a year ago, thanks to the dollar flexing its muscles against the rupee. And if you have a child in the US, you are probably already feeling the pain. For a good college in the US with a tuition fee of around $50,000, a year ago, you were paying around 37 lakh rupees. This year, it's nearly 41 lakh rupees. But this is based on an exchange rate of around 82, which is not what you pay when you go out and buy dollars. You shell out more. In fact, as of today, more than 85 rupees in some cases to buy the US greenback. A survey by Bank Bazaar shows. The country's largest bank, the State Bank of India, sells a US dollar for 82.54 rupees on forex cards. If you exchange rupees into dollars in cash, the rate is 83.30. ICICI Bank and HDFC Bank have the same exchange rate, 83.47. However, purchase dollars in cash from ICICI Bank, you will have to fork out 85 rupees 2 paise. Bank of Baroda, another PSU bank, is among the cheaper options, while Axis Bank will sell you a dollar at 85.05. If you approach Thomas Cook, you'll have to pay 83.08 rupees for a dollar. The rupee has fallen more than 10% this year against dollar. It is, however, still better than the other major world currencies. The Japanese yen has lost nearly 30% of its value against the dollar this year. The British pound has slipped 21% to below a dollar and continues to weaken even more despite Bank of England's decision to buy bond worth $65 billion. The euro is down 18%. Even the Chinese yuan is down around 12% this year. So if you're asking a cousin to get that iPhone Pro Max from the US, instead of paying 90,200 rupees for the phone, you should probably be giving him the real exchange rate price, 93,500 rupees. And not just going abroad is expensive, the rupee's decline to a historic low will make it more costly to import crude oil and other goods, which would further increase inflation, which has been beyond the Reserve Bank's upper tolerance range of 6% for the previous months. Bureau Report, Business Today Television.
The central government has decided to postpone the rule which mandated 6 airbags in every car from the 1st of October this year. Road Transport and Highways Minister Nitin Gadkari has tweeted that the date for implementation of 6 airbags in passenger cars has now been pushed to October 1st, 2023. Chetan Bhutani, who broke the story last week, joins us with the details. Chetan, why has the rule been postponed?
Well, that's right. Business Today TV was the first to report the story on September 23rd. That this rule of 6 airbags, which was supposed to be implemented from 1st of October 2022, will not meet its deadline. And however, in a series of tweets now, the Minister for Road Transport and Highways, Nitin Gadkari, has announced that regardless of all the issues regarding the cost and the variance, use of the issue of public safety is of utmost importance to the government, and keeping in mind the supply chain constraints and the macroeconomic situation, it has been decided to defer the timeline from 1st October 2022 to the 1st of October 2023. Well, when I spoke to my sources in the government, I was told that the government will not relent further from the October 2023 deadline, and in fact the auto companies will have to comply with the rules and regulations set by the government. In fact, the government was in constant negotiation and constant discussions with the airbag manufacturers and the concerned stakeholders, including SIAM and ACMA, for that fact. However, the sources are also pointing out that this rule of 6 airbags would be made mandatory from October 2023, and that every vehicle manufactured after 1st October 2023 would have 6 airbags, which means the front 2 airbags and of course the side and the torso and the curtain airbags would be included. However, we can expect more safer cars from October 2023. Remember, the issue of road safety really came into the spotlight in India after the unfortunate demise of the industrialist Cyrus Mistry.
Thanks, Chetan. Sports car super brand Porsche has made a big bang entry into capital markets with a $19.5 billion euro listing. Porsche AG made a strong start after it was listed at a valuation of 75 billion euros in what is Germany's second biggest market debut ever. Despite the current market weakness, the share was trading up 3% in midday's trade. Interestingly, the valuation of Porsche is close to the 80 billion euro valuation of its parent company Volkswagen. The Porsche IPO comprised 911 million shares, a play on its most famous car model. That's all we have time for on the show tonight. Thanks so much for watching.